All right, so we have 3 more things left to do in our adjustments, okay? Because here the last thing that we did was the amortization for 1 month for the goodwill. We've already done that, okay? So now we need to complete these last 3 things. So we need to adjust the office supplies. We have $80 left on hand, okay? So as I mentioned before, office supplies expense, right? When you buy office supplies, right, you're going to be using them throughout your entire business. Now, in this case, it says that I end up using um, a total amount of office supplies, and I have $80 left remaining on hand. Of course, this is a rough estimate. It's not like it's not like we counted each sheet of paper and things like that. It's just a rough estimate. So in this case, right, out of all the things that we bought, right, we have $80 left on hand. So how much office supplies did I actually use? Well, that's how much we have left on hand. So how do we determine how much we have right now? How do I know how much office supplies I have right now?
Would you check the ledger?
You would check the ledger. Okay, so let's go to our ledger and let's find out how much office supplies we actually have in the first place. Okay, so let's see, business supplies, no, okay. All right, office supplies. Right now we have $150 worth of office supplies. And at the end of the month, I only have $80 left. So what does that tell me? I started out with 150 and now I only have $80 left. How much office supplies did I use?
$70 worth?
We used $70 worth. Now in this case, that means I need to adjust my office supplies to represent that I don't have $70 worth of office supplies. So in this case, right, looking at my ledger, if I need to go from 150 to $80, that means I must decrease my office supplies, right? But when I adjust my office supplies to decrease my account, what account do I need to use to represent that I got rid of it? Okay. What type of account represents using, getting rid of, spending? Okay, use your chart of accounts to help you out here. Okay, is there anything in the list that has the words office supplies in it?
Yes.
What is it?
The office supplies expense?
Yes, okay. The word expense means that you used, you got rid of, you spent, right? When we're talking about inventory, how do I get rid of my inventory? I use the cost of goods sold, which is an expense, right? When I need to spend something for the business, that's an expense, right? So in this case, this is also another word to say I used. I used the office supplies, so I'm getting rid of the office supplies. So in this case, office supplies expense is going to be the account. This represents how much you use for the month of June. Okay, so office supplies expense. which is account number 6750. And I know I used it for $70. So make a little note here to adjust the usage of office supplies. Okay. If it's specific, because I believe right here we said that we have printer ink, we got paper, pens, and we got some labels. Well, I mean, like I said, it's a rough estimate. Okay. Sometimes what you could do too is, if you know that you're going to get rid of it off your books immediately, you don't actually need to journalize it as an asset. You can just journalize it immediately as an expense. So that's one of the rules of journalizing, is that if it's something that's like $5, right? If I bought a ream of paper for $5, right? I don't need to keep that in my books. That $5, I know it's going to be gone, right? Or I'm going to open up the package of paper and use at least a good chunk of it, right? I don't need to keep $2.50 in my books to represent that I have this much paper, right? So what you could have done too is you could have just simply recognized it as as an expense if you don't want to keep track of it per dollar. Okay, but in this case, that we've already journalized it first, and now we need to make the adjustment. So this is exactly what I need to do. Right? So now that I've journalized it, right, I can go ahead and pop it into my ledger. Since I'm already here on my account, I'm just going to go ahead and credit it out right here. So in this case, adjust, it's an adjustment, okay? Used $70 worth of supplies. So, right, 150 minus 70 is going to give you a balance of $80 remaining, which is exactly how much we have left on hand. Okay. And I need to also update my expense here for my office supplies account, expense account. So here I am, office supplies expense. This is an adjustment, usage of office supplies. Okay. And we're going to debit it for $70. Okay. So that means the last couple transactions, we're going to start on page 24. Okay. Now, for this right here, we should also accrue for Irene's wages, okay? And it says right here she worked a full week, okay? A full week, since she's a full-time employee, right? A full week would be 5-week period, 5 days, okay? So that means she worked one whole entire week. So she earned a whole week's of paycheck, okay? Now, in this case, why are we accruing, right? She's not going to get paid until the next month, right? Because that's how pay periods work. But what we're going to do is we're going to say, this is how much I owe her for the month of June, right? Because we're trying to accumulate all of the expenses that we've done in the month of June. So then when we do carry over into the next month, right, of July, right, we have a starting period, right? We have all of our assets, liabilities, and equity. We have all of those ready to go, and then we're going to start all over with our income and our expenses. So in this case, this is something that has occurred in the month of June. So we need to also calculate this so then we can say that we owe her for the month of June, and then whatever amount that she's earned in July, then we calculate how much she earned in July and give her paycheck then. Okay, so that's what we got to do. We got to make sure that we keep our calculations, and everything that happened in June, we separate it. So in this case, we need to accrue Irene's payment, saying that we owe her for the last week of June. Okay, so in this case, she worked a full week. So let's go ahead and go into my commissions here. Okay, or not commissions, sorry, my subsidiary ledger, and I'm going to go into employees. So in this case, right, Irene is going to get paid, okay, 2 weeks from now. So if her last payday was June 28th, 2 weeks from now, you can go ahead and just calculate what 2 weeks from that is. 2 weeks from now, on July 12th, is when you're going to pay her the next time. But in this case, right, Irene Jameson, right, her pay rate right now is $8.50. Right now, she's worked a total of 5 full days. 5 times the 8 hours, because she's a full-time employee, right? She's earned so far a total of 40 hours. Okay? So in this case, right now, I owe her 1 whole week's of paycheck, right? Because if I look at my calendar, okay? If I look at my calendar, right? Today is Sunday. Today is Sunday. Okay? Meaning I owe her for the 24th, the 25th, right? She gets Wednesdays and Thursdays off. So I owe her for the 24th, the 25th, the 28th, the 29th, the 30th, and 30th. So that's 5 days that I owe her, because the date that I'm on right now it's Sunday. So in this case, I owe her a total of 5 days work days in June. Okay, so in this case, how much is going to be the total amount that I owe her for the month of June? In this case, right, 40 times $8.50 is going to give me $340 that I owe her for the month of June. Okay. Now in this case, because I'm not paying her, right, I'm only calculating what I owe her for the month of June. In this case, I'm not going to pay her until July, right? Until July 12th, because her pay period is bi-weekly. I'm not going to cut her a check for $340, because I have to figure out how much income tax I have to pull out of it. I have to calculate how much Medicare and all that stuff, right? But that can't be done until her pay period is over. She still has 1 more week to accrue for her work period. So in this case, $340 isn't what I'm paying her. So that means I do not need to calculate the rest of her stuff. I don't need to calculate her federal income tax withholdings, any of that money, because this number 340 is incomplete. It's not her gross wages. This is only what I owe her for the month of June. Okay? So in this case, that's all I need to expense and say that I owe her. Okay? Since I'm not going to pay her now, I'm going to pay her later. So in this case, right, this is where, all right, the one thing I'm going to do is recognize is going to be salaries and wages expense, since this is the amount that Irene has earned in the month of June. So this is what I am supposed to spend on her for the month of June. Okay? I have to recognize that first. So let's see. salaries and wages expense, 6810. Okay. And I owe her $340. Okay. But I'm not going to pay her now. I'm going to choose to pay her later. So which account would I use to represent that I'm going to owe her money?
Salaries and wages payable.
Correct, right? Because in this case, I owe her a payment for her salaries and wages payable. Okay. Wages account number 24010. Okay. Now, so then when I do get the chance, let's say it's fast forward, it's July, right? What I have to do is I have to pop in what I owe her, pop in what she earned that following week, right, in the month of July, and then I pay her. Okay, so I will pay her for the total amount that she's earned. Okay, so in this case, that's what I'm gonna do. But right now, this tells me I owe her this much money for the month of for the week that she worked for the month of June. Okay, and my note here is to accrue Irene's earnings for June. Okay. So then now I have to pop it into my ledger because that's the next step, right? So here I'm already on salaries and wages expense. So here it is. Okay. And you can also write here accrue Irene's earnings for June. Okay. For $340. So in this case, my total that I have here for my total salaries and wages expense is going to be for $884 because this is how much I paid for Irene for the month of June. Okay? Total of $884. And now I need to go into my liabilities ledger and pop in that I owe her money for the month of June. Okay, so right here, salaries and wages payable. Accrue for Irene's earnings. For $340. Okay. And now I also, last thing I have here is I need to accrue, I need to accrue for Irene's wages. I need to accrue for Albert's commissions that he's earned for the month of June. Okay. So, same thing. So if I've done the same thing for accruing for Irene, right? I have to do the same thing to accrue the earnings that Albert has earned for the month of June. So in this case, what accounts will I be needing to use?
Commissions payable.
commissions expense and commissions payable, right? Because yes, so in this case, account number 2420. Okay, and then this one is commissions expense is 6820. Okay, so commissions expense, and since I owe Albert, I'm not going to pay him yet. Commissions payable. Okay. So expense was 6820, and this was 2420. Okay. So let's go ahead and go into my subsidiary once again because I have my commissions here. Okay. So this is how much I owe Albert right now. So the last thing that he's done was make a delivery on June 30th, right, to Super A Market. And he's earned a total right here of $271.78. So I'm going to highlight that just so that I know this is how much I owe him. You could do another color so you don't get confused that you're not going to pay him this yet. This is just what you owe him. Okay, so you owe him $271.78. Okay, at the end of June. Okay, $271.78. Okay, $271.78. All right, so that means you're completely done with your subsidiary because this is the last transaction that you have here. All right, and then your last note that you need to put in here is to accrue for Albert's sales for June. Okay. And of course, what I like to do too is I like to block this part off so I know the next time I add something in here, that means I'm done with these transactions. And if I have a mistake, my mistake is going to happen between between the 30th, and it's also going to happen between the 30th. The adjustments, the whole adjustment section is separated. Okay. Okay, so I'm going to go ahead and say the adjusted trial balance. Okay. All right, so let's go ahead and plug that number into my ledger. So here you go. I'm already on my liability. So let's go ahead and just pop this in here for my commissions payable. Okay, for Albert. For a total of $271.78. And then I need to go to my last thing here, which is my expenses, commissions expense. for 271.78. So in this case, add these two numbers up together for a total of 411.96. Okay? So this is where I stop here. So I need to save my work, okay? Because of course I will be using the journal, but right now I can set it aside unless I need it to find any discrepancies that I have in my journals, okay? But the main priority thing that we need here is just the ledger, okay, and your financial statements, or in this case, your trial balance financial forms, okay? Because that's what the next step we're going to do here is complete the adjusted trial balance, okay? Now, if you recall what we did the last time for the unadjusted trial balance, right? I instructed you to create the trial balance but using the main accounts, okay? And I want you to keep on going with this. So that means the next time you make a copy of this, I want you to continue on with this list right here, because what I'm going to have you do is for the financial statements, okay, you're going to be strictly only using main accounts. And this is going to make your financial statements a lot concise and much cleaner, okay? Especially because you don't want to list out all 100 accounts like this, right? You want to kind of be very short, simple, and narrow. So in this case, that's exactly what I'm going to do. Is I'm going to continue on with this worksheet here. I'm going to make a copy of it so then I can compare my unadjusted to my adjusted. Okay, making sure that I didn't make any mistakes anywhere. So I'm going to go ahead and I'm going to delete my adjusted trial balance here. And I'm going to make a copy of my unadjusted trial balance. Okay, so move or make a copy, create a copy, and I want this to be right in front of my income statement. Okay, so there it is. I have a copy of my unadjusted trial balance right here. You have a parentheses 2. I'm going to rename this to say adjusted trial balance. Okay, and I'm going to also make changes to the title here because this also says unadjusted. We wanted adjusted. Okay, ending the 30th of June. So that's fine. Okay, so there you go. I have an exact copy of my unadjusted trial balance. And what I'm going to do is I'm going to make the fixtures that I need to make, right? And also insert the extra accounts that I've used for the adjustment. So therefore, I need to add in, my depreciation, my amortization, my bad debt, my office supplies expense, and so on and so forth, okay? So we're going to continue on using this, and we're going to do the following, including all of the main accounts, okay? So starting with the very first one, we're going to go to your assets, okay? So in this case, again, by doing this, right, your formulas are still intact. So if I add a row in here, it will continue to create my calculate my formulas. However, sometimes you may have to re-trigger it. We'll just check up on that afterwards. Okay. So starting with the first one, we got my bank. So my bank is my main account, right? It's going to consist of 3 things: my checking, my checking, my petty cash, and my cash in the register. So starting with the first one, my checking account, right? We made some adjustments. So right now my checking account has 13,142.60. Okay? So that has changed my total amount in my bank account. Okay? However, my petty cash is still at 500, and my cash in the register is still $310. So in this case, that's all the same. Those are all the same. So right now, I have a total of $13,952.60 in my bank account. Okay. Next one I have here is going to be my accounts receivable. So in this case, my accounts receivable right now says that I have 15,000 or $1,531.95. However, I have a contra account. Okay? Now a contra account is going to reduce the main account entirely. So in this case, I'm going to insert a row, right? I clicked on my business supplies and inserted a row. And this is going to be the allowance for doubtful accounts. Okay? And again, this should be in black just because it is a sub account. Okay? However, it is going to reduce my main account. Or in this case, it is a main account. It's a contra account, excuse me. Okay? So I'm going to put this in black just so then I can kind of differentiate the difference between this so I don't confuse them that this is not a main account. This is just a contra account. Okay? And what this is going to do is because it's on the credit side, right? If I do this as a debit to credit, right? And it's for $67.60, right? I'm going to put this on the credit side. So then when I do my total debits equaling my total credits, at least that will be consistent, right? However, because if I'm dealing with main accounts, I actually have to change my formula here. This is going to be the combination. So in this case, I'm going to take my debit of the 15 and I'm going to subtract my credit of that 76.60 because that is what the main account does, right? The contra account decreases the main account. Okay, so in this case, that's what I have to do. So in this case, when I look at it, this is going to give me what people should actually owe me. Okay, so they should owe me right now currently $14.55 because this is my assumption is that in reality, right, at least 95% of the people are actually going to pay. That means I'm only going to collect $14.55 out of the 31. Okay, that's just my assumption here. Okay, and that's what you have to do when you have a main account that includes a contra account. Okay, so that means when we dive into using all the accumulated, we have to do the same thing. So it's going to be a lot of calculations, a lot of tedious work, but that's the point of this, okay? It's to show you how to formulate this trial balance using the main accounts. Okay. So then business supplies, right? We made adjustments to this. So in this case, we have $92.17 of the medium cups left. Okay. We also have $216.70 left of my large cups. Okay. We have $21.60 left of sugar. Okay. And lastly, for creamer, we have $179.63 left. Okay. 179.63. And there we go. So that means my total business supplies, I have $510 left in my business supplies. Okay. Office supplies, we just adjusted this, so I only have $80 left. Okay. Okay, next is inventory. So my regular coffee, I have $20.82 left, which is correct. And I have $133.70 left in my Supreme coffee. But I also have to include, because I did my periodic adjustments, I have to now include that I have ceramic coffee mugs as part of my inventory. So I'm going to click on this row here for furniture, and I'm going to insert this so I have another row here. Okay, and this is going to be the ceramic coffee mugs. Okay, which I have it for a total of $386.12. And what I'm going to do here is I need to change my formula because I need to include for my main account of my inventory to include the ceramic coffee mug. So I got regular, supreme, and the ceramic coffee mugs. So therefore, I should have a total of $540.64 in my inventory. Okay, so I added ceramic coffee mugs here. Right? So the next account's going to be tricky because I have a whole bunch of contra accounts in here, right? I have to put in one at a time all the accumulated depreciations in here. So in this case, I have accumulated depreciation for the table, accumulated depreciation for the counter, the desk, and the shelves. So that means I need to do a lot of inserting, and what I'm going to do is I have to add and subtract the two debits because this is going to give me my current book value of all of my furniture. And that's the goal here, is to tell me what I actually have versus what I do have. Okay? So right now, my furniture is outstanding at a total of $9,033.75. That's my total furniture right now at its book value when I bought the assets. Okay, so now I need to add my adjustments to calculate the accumulated depreciations. So again, you need to create a row for every single one. Yes, you could, if you want to take a shortcut, you could just go do a accumulated depreciation for furniture. But once again, you don't have that account. So it will throw you off unless you want to create an account for that. But in this case, I have it for every single individual one. So I'm just going to do really short, okay, accum deep tables. Okay. So there you go. I inserted the 4 accumulated, right? And now I need to put all of those numbers in the credit side on the black labels, okay? And then I need to recalculate my formula because now I have to add the furniture at its book original historical cost value minus the accumulated depreciation to get the current fair market value or the current book value after using the assets, right? So I'm going to start with the first one here is the accumulated depreciation for the tables. I got 78.63. Okay. For my counter was $14.21. Okay. My desk was $7.84. And the accumulated depreciation for my display shelves was $6.87. Okay, so once again, I need to change this formula. Okay, now if you know how to do it, yes, you could do the equal sum of the furnitures here minus the equal sum of the contra accounts. But I usually have a problem doing that. I always run into errors for that. So in this case, I'm just going to go one by one and say, this is my table minus the depreciation. I'm going to add the counter minus the depreciation. I'm going to add the desk and minus the depreciation. And I'm going to add the shelves minus the depreciation. So right now, with the accumulated depreciations, my book value at the end of depreciation right now should be $8,926.20 worth of furniture. Okay, when my original was the $9,033. Okay, now that's my book value. That's my historical cost. Remember that, right? The $9,033. This is after using, and you're adjusting it to say that I used the furniture, and this is how much my fair market value is now, or my book value is right now, in case I choose to sell my furniture. Okay, so right now I have a total of $8,000 worth of furniture. Okay, and you're going to do the same thing for all of your office equipment. Okay, you can do the same thing to your equipment as well as your vehicles. So in this case, right, office equipment, I have the accumulated depreciation for my computer, the accumulated depreciation for my printer, and the accumulated depreciation for the register. Okay. So, as I mentioned before, right, your trial balance, you can abbreviate as much as you want. Okay, this doesn't matter as long as your accounts numbers match up in regards to the account balances. If you know what the accounts are, that's pretty straightforward, right? It's not like you're just testing the to see if you did your accounting correctly. So you don't really necessarily need to write out all of it if you don't need to. So the accumulated depreciation for my computer was a total of $61.16. Okay. My accumulated depreciation for my printer was $12.63. And my accumulated depreciation for my cash register was $21.65. Okay. So once again, I need to do that formula again. I started out with my printer, with my computer, but I got to minus the depreciation. Okay. I'm going to add my printer, but minus the depreciation. Okay. And I'm going to add the register, but minus the depreciation. So now I should have $2,767.76 worth of office equipment. Okay? Where opposed to I had 2,900. Okay? I need to do the same thing to my equipment. So I have to do my coffee brewers and my coffee grinder. Okay. Okay, so I had a cume deep of my brewers. And then I had a cume depreciation for my grinder. Okay. So let's see. For my accumulated depreciation for my brewers was a total of $96.20. Okay. And then the accumulated depreciation for my coffee brewer or grinder was $69.09. Okay. So right now I currently have 8,650. Okay. So I'm going to add my coffee brewers minus the depreciation, add the coffee grinder minus the depreciation. So I am now at 8,400. Okay. Last but not least, vehicles. Vehicles. I have an accumulated depreciation for the truck. Which gave me a total of 257.67. 257.67. Okay. So in this case, my vehicles is the main account. So what I'm going to do here is I'm going to take my vehicle of 32 minus the depreciation, which will give me a total of 31,951. Okay, so that's my current book value for my truck because I drove it, I think, 1,200 miles. Okay. All right. Prepaid accounts, let's see, is still at 665,417. My deposits are still at 1,700. Okay. Goodwill, right, is still at 2,100, but I have an accumulated amortization for my goodwill. So in this case, I need to add this in here because amortization, once again, is also a contra account. So a cum amort, okay, for goodwill, which is going to reduce my goodwill by $11.67. So therefore, I need to change this formula to represent because goodwill is a main account. I'm going to take my goodwill and subtract the amortization to get my book value of 2088 for my goodwill. Okay. And then that is it for my assets. Okay. So now I can finally move on to the next section, which is going to be my liabilities. Okay. Liabilities, let's see, let's just go over it for, adjustments. So in this case, I had a bunch of bills. So my accounts payable has changed. It is now 654,786, where it used to be accounts payable. It used to be 3,885. So in this case, I have to increase it to represent the 6547. 6,547,86. Okay, 6,547,86. Okay. My Visa payable, right? It should be 0 because I transferred the amount to my accounts payable. So in this case, accounts payable is 0. Okay, you can either get rid of it or you can leave it. It doesn't matter. Okay. Next is going to be notes payable. It's still at $649.49. Okay. And then I have my payroll liabilities. Okay. So in this case, if you remember, I have to insert 2 more things because I now have salaries, wages, expense, and payable and commissions payable. So in this case, I need to insert above the FITW. Okay. For the salaries payable and the commissions payable. Okay. So let me see. Salaries payable was $340, and the commissions was $271.78. Okay. So this is where I need to make a change to the payroll liabilities formula because in this case I inserted 2 more things in here. So that means I need to include the salaries, the commissions, FITW, OASDI, HI, company FICA, FUTA, SUTA, and workers' comp, since this is all my payroll liabilities. So now I have a total of $791.54. Now I need to also double ensure that the rest of the information is correct as well. So in this case, FITW is still 4016. Okay. OASDI is still $33.73. My Medicare is still $7.89. My company FICA is still $41.64. My FUTA is still $32.64. SUTA is still $16.32, and workers' comp is still $7.40. Okay, so those are all good. So I can go ahead and skip forward. Okay. Next is sales tax. Oh, let's see, what's this? Utilities payable, so nothing there. Okay, unearned revenue, nothing there. Okay. Then sales tax payable. Let's see, is it still the same? 2004-46. Okay, let's see. 2046. Okay, 11. Okay, so that's still the same. And then we need to insert because we had interest payable. Okay, so we need to insert that right above loans. Okay, insert for interest payable. Okay, so we have an interest payable of a total of 101.34. Okay. Let's check out my loans. So my loans, again, since we received our bill, right, we decreased my loan from 29,221 to 28,445.14. Okay. 28,445.14. 28,445.14. Okay. And that's it for liabilities. Okay. Equity, let's see. Did we make any changes to equity? No. Right? Our owner's equity is still 30,000 and my owner's withdrawal is still at 3,000 on the debit side. Okay, so those haven't changed yet. Okay, so I can move on to the next one. My revenues. Revenues, we didn't make any real changes, but we should just double check. Okay. Is my sales for my regular coffee 13.94.96. Okay. My Supreme coffee is 14.36. Okay. My ceramic coffee mugs is still 17.63. My sales for medium regular is still 52. Okay. Large regular is 6503. Okay. My medium supreme is 665577. Okay. And my large supreme is 7524. So again, my sales is intact. No changes there. Okay. My sales discount is still or my sales returns and allowances is still 19.96. My sales discount is still 1,979 cents. My delivery income is still at 300. Okay, so my revenues are good. I don't have any changes there. Okay, and I don't have any interest income. So next one is cost of goods sold. So in this case, yes, we had a lot of cost of goods sold, right? Cost of goods sold for my regular coffee is 1407. Okay, 1407. Okay. My cost of goods sold for the Supreme coffee is 1488. Okay? 1488. But we did an adjustment. So in this case, we need to include the cost of goods sold for the ceramic coffee mugs as part of the cost of goods sold. So in this case, I need to insert a row here for the cogs for ceramic coffee mugs. I could have just put mugs. Okay. Which gave me a total of 1183.84. And I need to change my formula because now I need to include my regular coffee, Supreme coffee, and my ceramic coffee mugs. So now give me a total of 4,080 for my main account for the cost of goods sold. I also need to create a cost of materials because I also made an adjustment to my coffee cups, right? My sugar and creamer. So I need to insert a whole section in there as well. Okay. So cost of materials, medium, large, sugar, and creamer. Okay. Okay. Okay, so in this case, cost of materials is my main account here. I think it's the wrong color. I think it's the other one. There you go, cost of materials. Okay, which is going to include my medium, large, sugar, and creamer accounts. Okay, so in this case, right, my medium cups was a total of $286.70. Where did I type that in? Okay, let me see. What did I do? 286.70. Okay, so let's see, ceramic coffee mugs. Okay. 286.70. Okay. My large cups was $351.63. 351.63. Sugar was 43.20. And then my creamer was 359.26. Okay. So I had a grand total here of my cost of materials to be a total of $1,040.79. Okay. Okay. So now that cost of goods sold, cost of materials is done. I can move on to my last section, which is my expenses. So going down the line, okay. Starting off with advertising expense is still $185. I have bank fees now, so I need to include that. Okay. My bank fees right now is $268.30. Okay. My business expense has increased to $1,282.78. Okay. My freight expense is 0 because I did my periodic conversion, so I have nothing in my freight expense. My insurance expense should be the same of $195.83. Okay. I have interest expense, so I need to include that in here. To be a total of, let's see, my interest expense is 101.34. Hold on. 101, 101, 101.34. What did I type in for my payable? Interest payable. interest payable. I have 101.34. Okay, never mind. Okay, 101.34. Okay. Labor expense is still going to be $18.90 for the subcontractor and $252 for the temporary labor. License and permit still at $375. Loss on disposal of assets still $2,000. Oh, I have office supplies expense, so that's something I need to include now. Okay. Office supplies expense. Okay. For $70. Okay. Payroll expense, right? I've increased my salaries and wages expense. Okay. It is now $884. And my commissions expense is now $411.96. $411.96. My payroll taxes is still $97.98. My purchase expense, right? Because I did my conversion, I have nothing in there. Okay. And because my purchase expense also includes my purchase returns and allowances, I also have nothing in my purchase returns and allowances. Okay. And let's see what's next. Rent. Let me see what's this. Purchase discounts, nothing there. Rent expense is still $1,500. No utilities, no travel expenses. However, we have the last three, which is my bad debt expense, depreciation, and amortization. So I need to include all three of those in here. So 1, 2, and 3. So starting with the first one, we got bad debt expense, which we had a total of $76.60. Okay. We had depreciation expense for a total of $625.95. Okay. And then last but not least, we had amortization expense for a total of $11.67. So let's see. Do I have any discrepancies in my formula? Oh, I'm off by $776.76. What is that? I must have typed something in.
I think it was around the loans.
Okay. Okay, so let's go to loans. Loans. Here it is, loans. Oh yeah, it says it's supposed to be. Okay, I put it up here. 2844514, right? Let's see. I think that's right. And there we go. We balanced on both ends, both on the debits and credit side, as well as the main accounts also match on both ends as well. So there you go. Success. We're at $99,381.97 on my main accounts. My actual, all of my accounts is at $100,096.19. Okay. Yay, that means we can move on forward. Okay. Awesome. Okay, so we can move on forward to the next step, which is going to be doing the financial statements. Okay, so right now, save your work. It is 2:42. I'm going to round that to 2:45 here. So please be